A slight bounce back from the first quarter contraction in economic performance is expected in the second quarter. Economists say the local economy will likely register growth of just below 0.5%. While the agriculture sector performed better in the first quarter, drier weather conditions linked to the El Nino phenomenon threaten to impact this sector negatively. Despite the constant electricity supply, the manufacturing sector's performance was weak, growing by 0.9% in the quarter. That's on the back of lower local demand and the weaker global economy.
We think that GDP will already be a little bit stronger in the second quarter, and generally we expect an uptrend in economic growth over the medium term. And that should be positive from an employment perspective.
The reforms taking shape are expected to have boosted economic performance.
Load shedding numbers, we haven't seen load shedding in over 4 months. And I think that, has contributed to a better sentiment around energy security. So going down the line, I think we should see some improvement coming through on business confidence, firstly from the increase in energy availability, but also because the government of national unity is now in place and a lot of that political uncertainty is behind us, given that the May elections have already occurred. On the electricity side of things, we could see a further improvement in the energy availability factor within the next couple of weeks. We've got one more unit of Medupi coming online. That's just under 800 megawatts. And we've also got the second unit of Coburg that's likely to come online. That's just under 1,000 megawatts. So that should continue producing at Eskom's generation fleet, making that energy availability factor a little bit higher.
The improvement in economic performance will likely lead to better employment prospects, although not strong enough to make a dent in the high unemployment levels.
If there isn't a lot of performance, you'd find lots of companies having to let go of the staff. And that's what we've seen with the unemployment figures increasing to around 33.5%. Of people not participating and engaging in the economy. And that just shows you that there isn't a demand for work because there isn't a demand for production. And that shows you that in terms of growth, which is a culmination of labor, of production, of demand, that growth ultimately is not being realized. And you're also looking at the second quarter. The South African Reserve Bank has said that they're looking at growth to grow around 0.6% in the second half of the year. And that on its own is not necessary for a developing economy like South Africa. It's not really, not even though it's not necessary, but it's not sufficient.
Growth for the year is expected to be just above the 1% mark.
We think that the full year will probably end off just a little bit higher than 1%. I think, at the margin relative to the start of the year, the fact that we haven't had load shedding for quite some time and Eskom's generation fleet performing a lot better, given that they've done quite a lot of that maintenance in the past. We haven't actually had as many unplanned breakdowns as what we've had in the past couple of months. I think that should add to some upside surprise to that 1% sort of estimate for growth this year. And of course, we've also got the two-part pension reforms that could at the margin add to some consumer spending. We're quite optimistic that the growth in fixed income should start picking up over the course of the remainder of this year and next year.
Expected rate cuts towards the end of the year will also likely boost consumer spending and contribute positively to GDP. Gloria Sefakomosi, SABC News, Johannesburg.